Why is it said that Cardano 10 times is a no-brainer? Watch this video to find out why Cardano is expected to skyrocket soon. Cryptocurrency experts believe that Cardano has had the fastest ever recorded adoption rate of all technologies, and the adoption of blockchain technologies has reached a level we cannot comprehend. As a dominant means of transferring value, central bank digital currencies adopt blockchain technology. And as sovereign states become involved in crypto, as pension funds become involved, as asset managers become involved, and as retail becomes global, we're seeing a revolution taking place. Also, innovation is occurring at a pace that it is hard to comprehend, and in a digital age, everything goes to zero. And this is because Moore's law means that the ability to increase computing power makes it possible to create infinite amounts of it. Further, you can also add edge computing and other technologies to it to keep it going. Therefore, blockchain created scarcity in a digital world to secure value, and that statement is quite profound. Ethereum also created the ability for contracts to be placed on the blockchain. Therefore, it would be stupid to bet against this information if you have it at your disposal. In light of all we've discussed, why is it important? Often, people get into crypto very early as a result of seeing the financial and euro crisis, and they realize that no one owns anything. For this reason, whenever you have collateral and leverage of 30 or whatever, there are 30 claims in the same thing, so you own 32 of that collateral. This means you lose everything. Additionally, there were questions about the printing of money. Even though some people argue that it isn't printing money, I am not concerned about how it works, so long as it creates a common denominator. Both of these are major concerns, not just the devaluation of your money, but also that you don't own any property. Taking this case back to Russia, it does not own any of those dollars. Having Bitcoin comes along, and it's very interesting as it helps us solve what we see all around us. Ethereum then comes along, and you've got that contractual agreement to abide by, and you can then build applications on top of it. Therefore, they started building a decentralized world where decentralization is the key to financial independence because the banks are the problem. This is because banks are too interconnected with leverage in the system, which does not work as it should. It's because monetary policy doesn't work that central bank digital currencies are coming, and yes, they will be used for direct payments that have different rates of interest because they want to punish some people more than others. Therefore, people will dislike it. Furthermore, it's much more effective than what we have now, a very blunt instrument for monitoring taxation and fiscal policy. I think that it changes quite a bit of that. Although this is an unpopular view, it cannot be avoided. In this context, you have to maintain your privacy. For example, when you use stuff like zero-knowledge proofs or other things that are a part of cryptography. As we can see from the big picture, we are witnessing every possible signal imaginable. Further, the world's financial system and global value system, and all digital assets and contractual terms will be built upon this system. This is a massive asset class with only a couple of $1 trillion, meaning if it were the same size as any other asset class, it would be around $200 trillion or $300 trillion. In any case, equities as well as the fixed income are going to be on-chain. In the same way, the internet is building the world's architecture, and it is set to become the architecture of the world. Also, this is the value layer and the contractual layer of the internet. Therefore, the market is a linear asset driven by adoption effects, which is Metcalfes' law. That's Metcalfes' law. It's so fast to adopt because it's built upon two other networks. This was an internet built on top of a data network, mainly based on mobile phones and cable. Stacking three networks on top of each other consistently produces faster effects, termed Reed's law. Hence, Reed's law is in play, and Metcalfes' law describes how to judge it by the number of people in the network, their connections, and the value they transfer between them. In other words, when people say you cannot value digital assets in their magic internet money, that says nothing other than that they are entirely based on Metcalfes' law. It is entirely based on dollar amounts and the number of people transacting on-chain as far as value is concerned. They account for nearly all cryptocurrency prices. As a result, in exponential assets such as Amazon stock and Facebook stock, the early stage of adoption is volatile because it isn't known if it will succeed. Will it grow or not? Over time, volatility declines, but the rate of increase keeps rising in a logarithmic exponential trend. For all of this to make sense, all you have to do is create log charts of everything and everything looks normal. Like Google, Facebook, Apple, and Tesla, they're all the same. It's a network effect business. Even though you don't know what Tesla's network effect is, there is a network effect built into the stock. What's the next catalyst? It is believed that the adoption from institutions, the government, and everything else will happen next. It is also interesting to look at what's happening politically, which is another adoption factor. To own assets, you need assets over which no one has claim. For instance, Bitcoin and all cryptocurrencies are unclaimed assets, so you own them and can store them. Thus, it is extremely attractive for people who see what's going on in the story to say, I need this right now. You can trace everything that everyone does in the blockchain, but it means you're no longer part of the system. What a powerful mechanism. Secondly, for sovereign states, especially sovereign wealth funds, it will be a long-duration asset that provides some security. There will be further adoption by sovereign states as an asset rather than a currency. Hence a reserve asset that is very interesting. In my opinion, bitcoins are somewhat equivalent to pristine collateral reserves in the form of bitcoins. Now that we've got the sparks put in place, the next thing we need is for the inflation story to die, which will cause the central banks to print more money. The system does so well, drives adoption rather than driving just the price up, as it does with equities, gold, and real estate. Thus, it continually outperforms everything else during the times of monetary excess. In the meantime, Cardano has proven to be a great investment based on its historical price movement. In 2021, this digital asset received a lot of hype, and many believed it would kill Ethereum. Could Cardano steal Ethereum's market share? If so, should you invest in it? Cardano is a blockchain project where more than 70% of the ADA value is staked for pretty high network validation, and there aren't many decentralized applications or dApps on the ADA blockchain, which accounts for part of the high stakes. Moreover, Cardano began attempting to solve Ethereum's proof-of-work consensus problems after it was launched in 2015. Multiple layers of computation and settlement for Cardano and proof-of-stake consensus are only a few of its key improvements. As of 2017, the Cardano Settlement layer launched through the ADA ICO and raised around $63 million. Since the Cardano Settlement layer excludes smart contracts, at this time it could only be used to settle peer-to-peer payments. In the meantime, the ever-growing Cardano development team has been hard at work preparing smart contracts for the Cardano computation layer at launch. Also, Cardano has already proved its stake and is supported by a strong development team. While Ethereum focuses on developing its ecosystem through trial and error, the project focuses on getting it right the first time. Thus, Cardano's separation of the computation and settlement layers results in much lower transaction fees. Do you think Cardano is a good investment? With a solid foundation and a great deal of momentum behind the project, Cardano is undoubtedly one of the most promising applications in the blockchain space today. Many believe this will be the Ethereum killer, but this is extremely unlikely. But in my opinion, Cardano is likely to carve out a niche within the global blockchain system, but it will not flip Ethereum. With this, having a position in Cardano makes a lot of sense if you're bullish on crypto and blockchain in general. What can you say about it? Let us know your thoughts in the comments below and make sure to click the subscribe and bell buttons.